Hello and welcome to another edition of Between the Rows, the podcast of Glacier FarmMedia. I'm your host this week, Manitoba Co-operator Editor Gord Gilmour. On this episode, we'll talk to Bruce Burnett of Markets Farm about the state of the crop and what's happening in markets.
We're looking at a very good quality crop.
We'll check in with Glacier FarmMedia Regional Director for Ontario, John Gregg, about what he saw at the recent Canada's Outdoor Farm Show.
Some of it is the real advances in ag tech, with kind of a whole new ag tech ecosystem and proving ground in Canadian agriculture, which wasn't really there a few years ago even.
And we'll talk to John Smizer of the North American Equipment Dealers Association about the escalating cost of farm equipment, new and used.
Depending on which manufacturer and which product, we're hearing price increases anywhere from 15 to 20%.
But first, a word from our sponsor.
Maybe you've had an idea about upgrading your operation. Maybe about finally getting that renovation done or buying some new equipment. Or maybe you're thinking about how you can be a bit more financially secure from season to season. Get some help making it happen by speaking with an RBC Agriculture Account Manager. Then, set up an investment plan to make even more of your ideas happen. Visit rbc.com/chartyourcourse and get started today.
And we're back. You're listening to Between the Rows, the podcast of Glacier FarmMedia. I'm your host, Gord Gilmour. Farmers across the country are experiencing sticker shock when they visit their local dealership. The price of farm equipment's been rising fast. John Smizer is president of the North American Equipment Dealers Association's Canadian wing, and he's been involved in the farm equipment sector for many years. He joins us now to explore why that's been happening. John, thanks a lot for taking the time to join us today.
Glad to be with you. Thanks for having me.
So I've heard a fair bit of chatter lately about the rising cost of equipment. Can you give us some sense of the scope of this rise that we're seeing these days?
Yes. Well, when you look at new equipment, there's been a number of factors that have impacted the price increases that we have seen on new equipment. And I think if we back up to pre-COVID conditions, I'll get into that in a second, but pre-COVID conditions, our manufacturers had become very efficient in having a just-in-time delivery model for their production. And they had long-standing partnerships or relationships with suppliers and vendors, no matter where they were located in the United States and Canada and Mexico or across the pond. And the efficiency that the manufacturers gained with this just-in-time delivery model helped them, keep their costs down, and I think also kept the price of equipment down, to reasonable increases that we would see year over year. And, a reasonable type of increase that we would see would usually be around the 5% or less amount. Now, if there was something out there that was like an unexpected event, maybe we would see a steel surcharge being tacked on. But for the most part, just because of the efficiencies that the manufacturers had implemented in their production process, we didn't see very drastic swings in equipment prices year over year. Now, Tier 4 engines was probably an exception to that because of the additional cost that manufacturers had with developing that new technology. But for the most part, everything was, running very smooth, very, very efficient, and then COVID hit. And when COVID hit, it really impacted the supply chain, and that just-in-time delivery model was just turned upside down, and manufacturers had issues, everything from securing raw materials, securing vendors, getting product to their manufacturing facilities in a timely manner. It could be waiting in a port, et cetera, or just even trucking issues as well too. So we did really have a major impact to that just-in-time delivery model with the pandemic, and we're still trying to recover out of it right now.
So what, then you're talking about 5% or less being sort of what you would view as a reasonable increase in prices. What are some of the increases in prices we're seeing now in the marketplace?
So depending on which manufacturer and which product, we're hearing price increases anywhere from 15 to 20% over the past 2 years. And it's just, how the manufacturers have their supply chain is set up in the past really dictates where those price increases, were forced, if you will. And we track it on a monthly basis. And so our most recent stats are going back to the month of July, where we saw, a further 6% increase over the previous month. And, for all of our new equipment, we've seen continually, I say 4% in July over the previous month. But for every month, it's been a price increase like that, anywhere from as high as 4% to as low as around 1%. But keep in mind, this is a month over month increase. So when you look back over the past 2 years, in some cases it's 20% or higher.
And one of the things that seems a bit unusual to me is that I'm hearing the same sort of a thing is happening in the used equipment sector. We saw a little bit of that, I think, in automobiles as well for some of the same reasons, I suspect. Is this as an unusual a situation as I think it is? Is it unprecedented even?
Yeah, it's a great word to use. I've used that word a number of times because it is, and I've been doing this since 1996 with the Dealers Association. I have never seen it like this, where used equipment is increasing in value month over month over month. We may see a little bit of a blip in a short-term period, but we're looking at, almost on combines alone, we're looking at about a 2-year trend where there's been an increase or it's been stable month over month, price increase compared to the previous month. And tractors about the same thing. Just looking at some other stats that we got from our dealers, it's almost 90% of our dealers are stating that both their new equipment and their used equipment inventories are too low. So when you look at the type of year that we're having, where somewhat timely rains, commodity prices continue to be strong, interest rates, relatively speaking, are reasonable. Those are all of the metrics that impact demand. So we see a built up demand, a pent up demand from our customers, and our dealers are gauging the interest that's coming from their customers on quoting and everything. And so it's all hand in hand. If new equipment is going to be subject to price increases, we hope that used equipment follows along that line as well. We hope as dealers, and that certainly has been the case, that used equipment pricing has gone up. But an important thing to remember about this is, as used equipment prices go up, so does the value of the used equipment, of the farm equipment that the customer has on their lot. So when they're going in to trade, whether it's on a piece of used equipment or on a piece of new equipment, their trade is also worth a lot more to them. And in some cases, I've heard reports from dealers that customers are trading in their used tractors and their used combines for more than what they paid for it 2 years ago.
So we sort of spoke about this briefly earlier. We've seen a very similar trend in some other sectors. The one that jumps to mind is the automotive sector, and
Right.
it sounds a lot like we're talking about the same kind of constraints here. Is that kind of a reasonable assessment from somebody like me, who's a layperson on the outside?
Yeah, absolutely. Automobiles have been impacted by chips. The farm equipment industry has as well. Construction equipment industry has as well. And then just stability of the suppliers and stability of vendors. We've unfortunately seen some of the suppliers to the manufacturers go out of business during the pandemic because in some cases their business was just shut down. And then for a manufacturer to secure a new vendor, provide a component or an attachment or electrical harness, it's proven to be rather problematic to find one in a very timely manner, or one that doesn't have additional costs. And so, suppliers and manufacturers have also, faced material, surcharges, whether it's steel or other raw goods, and then throw in transportation challenges as well too. And and border issues and timely delivery of stuff. I haven't seen this, but I've been advised that in some of the major farm equipment manufacturers, their production facilities across the country, they've got hundreds of units that are sitting waiting for delivery, but also waiting for one part, one component, one item that needs to be put into that almost finished product before it can be delivered out to the dealer. And so we've had a lot of conversations with the farm equipment manufacturers about this, and they're completely frustrated because of the issues that they're having. And I think all of us are just waiting for the time that we go back to that just-in-time delivery model that we became so used to in pre-COVID conditions.
And you're confident that will happen? I guess that my question to you is, what will we expect to see in the coming months and years? Are we going to see this sort of dissipate as many hope it will, or is it something that'll linger a while?
Well, based on our conversations with the manufacturers, it looks like we're with this for at least another year. In the past few months, we've met with Case IH, with John Deere, with Kubota, and AGCO on this. And some of those manufacturers are optimistic that we will have the worst behind us 1 year from now, and we'll continue to deal with maybe some one-off situations. But for the most part, the worst of it will be behind us, is their prediction. So we also have some other manufacturers that are saying so it's really a fool's game to predict when we'll be back to pre-COVID conditions. So that's uncertainty that we would rather, not have. And we're getting into the fall order period right now. And some manufacturers on certain products are advising dealers to take orders on equipment, take customer orders, what we would call perhaps a confirmed retail order with a customer. But the manufacturer is not giving the dealer a price just solely because from their end, things are just so unstable and they're uncertain what their costs are going to be, that they're providing dealers with that guidance when they take orders. And I've never seen that happen before. We know that the manufacturers are doing their best to get a hand on what their costs are. But to throw out this approach into the marketplace, we'll just take the order and we'll deal with the price later. I can't really see a lot of our customers being very happy with that. But then at the same time, I think the manufacturers know that demand is still strong out there, and that if a customer decides that price increase that they're going to be imposed on after the fact decide to walk away from that order or walk away from that deal, that another customer will step up and take it in a heartbeat. So again, unprecedented times that we haven't seen before. And I will admit though, in the last 6 months, Gord, there has been some improvement on some products where delivery is getting better. Items where perhaps it was 6 months, the promise was 6 months out, and now it's showing up in 4 months. So we're starting to see some trends that perhaps it's getting better. But I think best case scenario, it's going to be at least 2023 until we're back to where we want to be.
Boy, that sounds like some difficult conditions with which to do business from the factory gate to the farm gate. I don't envy the sector.
Yeah, absolutely. This is a relationship-based business, and customers typically have a good relationship with the dealers. Dealers have a typically good relationship with the manufacturers. And, as an association, we want to see every sector succeed, our customers, our dealers, and our manufacturers. But when you have this uncertainty, it does strain the relationship a little bit. And unfortunately, we had the Russian invasion of the Ukraine also throw a little bit of uncertainty into the marketplace as well too. So we didn't expect that coming, and I guess war is never really a good time for it. But as we're trying to recover from the pandemic, this just I think added some additional consternation to the manufacturers, because that also created some supply chain issues as well.
John, I thank you for taking the time to run us through some of these issues. Much appreciated.
My pleasure, Gord. Thanks for having me.
That was John Schmeiser, president of NADA Canada. Across the prairies, the crop's coming off, and everyone's trying to get a handle on the quantity and quality of grain that's available. We're joined now by Bruce Burnett, Director of Weather and Crops for Markets Farm. He'll give us a bit of insight into that and what's been moving the markets these days. Bruce, thanks for joining us today.
Good to be here.
So what do we know about the crop that's coming off right now? Anecdotally, from a small sample of friends and family, I'm hearing the canola is okay, a bit disappointing, and the wheat's generally pretty good quality. But what's the big region-wide picture that we're looking at?
Yeah, actually, I think the trend that you are getting from your friends and family are pretty reliable here in terms of the bulk of the crop in Western Canada. We're looking at a very good quality crop, and yields. It depends on which crop you are and which region you are, but they sort of range from disappointing and quite frankly, some areas even similar to last year, all the way up to very good yields in other areas. So with the bulk of the harvest now, especially for wheat and durum off, I think we can safely say that this year's crop has been fairly high quality. And of course, the yields in most areas have improved from last year. Canola, on the other hand, has been a little bit more disappointing. I would say most of the disappointing areas are in the eastern parts of the prairies where we had excess moisture problems. Again, canola doesn't maybe handle excess moisture as well as some of the cereals do, so we're seeing a drop off in yield potential there, as well that those drought areas in west central, southwestern Saskatchewan, parts of southern Alberta also did have an impact on the canola. But in other areas, we're looking at a reasonably good crop on the canola side, and I would say the yields, especially in northwestern Saskatchewan and northern Alberta, are looking very good this year.
So once the production uncertainty's out of the way for the year, the next question a farmer always asks, in my experience at least, is how about markets? And I guess that's my question. What's happening with grain markets these days? Because from where I sit, there still seems to be a lot of uncertainty, a lot of volatility out there.
Yes, the markets this year have been incredibly volatile, and I think you'd be a fool to assume that we're not going to continue on the volatile side through this marketing year. The main feature of the markets over the past 2 or 3 months has been this concern about the increasing interest rates, increasing inflation, and its impact on the consumer and demand for all sorts of commodities, but that includes agricultural commodities. So we've seen prices for most of the major commodities drop significantly, at least in the futures market, and trade fairly sideways, for 2.5 months. Now that harvest's over, we're starting, I think, to reset and recalibrate, and we'll probably begin to trade fundamentals a little bit more than just the concerns about a worldwide recession or something like this. Of course, there's always the Ukraine-Russian conflict in that mix as well. So it's something the market's going to keep mind of. For all the basic commodities, be it coarse grains, wheat, oilseeds, even rice, we've had decent crops across the globe, but nothing that has really built stocks to comfortable levels. So we're still looking at a relatively tight stock situation globally for our basic foodstuffs.
And when you're looking at that relatively tight position, you alluded to this earlier, that Russian-Ukrainian situation becomes ever more important. What do we know about that and that grain? Will enough of it make it to market?
Well, I think that's a question that the markets are trying to settle out right now. With the announcement from Putin overnight about, I guess you would call it, an increasingly aggressive stance towards Ukraine, despite the fact that the Russians appear to be losing large amounts of territory in Western Ukraine, then I think that's something that we have to keep a very close eye on. The chief feature over the past 2 or 3 months has been the fact that Russia did allow Ukrainian exports. There was an agreement, and it's being monitored by the UN. Now, that agreement expires at the end of October, and I think it's probably very optimistic to assume that that agreement's going to continue after the end of October, given the recent statements from Putin and the Russian Federation.
So, turning the page a little bit, you talked about some of those larger economic factors that have been weighing on the market. One of them I'm curious about is the Canadian dollar. We've seen it dropping quite a bit against the greenback, and I'm wondering what effect is that going to have on farmers, and especially farmers that are exporters?
Well, I think, again, that this is the lone bright spot of the low looning is the fact that it does increase our farm gate values. So it provides a more attractive price than what we would be seeing if, let's say, the loonie was trading up in that 78 to 80 cent range, which it had been for most of the earlier part of this year. So that is positive. There is negative impacts, certainly, on U.S. dollar priced commodities for inputs, be it the price of fertilizer especially, but also for other commodities as well. In general, this U.S. dollar is extremely strong right now. It's the highest in over 20 years. The euro is trading below par to the U.S. dollar right at the moment. The British pound is at multi-decade lows compared to the U.S. dollar. But I don't see that changing. The problem with the high U.S. dollar is it does tend to cap commodity prices. So be it the wheats, which are traded in the U.S. that we base our prices off of, or any other commodities priced in U.S. dollars, there will be some resistance for prices to move higher. And that's because foreign buyers generally are converting their local currencies into U.S. dollars. And the U.S. dollar is appreciated by over 20% since the beginning of the year. So that's essentially a 20% increase in prices, with the commodity market itself doing nothing. So it's something to keep in mind here as we go through the next 3 to 6 months as we try to work through these inflation concerns and the Russia-Ukraine conflict.
Bruce, thanks for taking the time to run us through all of this.
Great to talk to you, Gord.
That was Bruce Burnett of Markets Farm. You're listening to Between the Rows, and I'm your host, Gord Gilmour. One of Canada's largest gatherings of farmers was just held for the first time since the outbreak of the pandemic. Canada's Outdoor Farm Show caters to farmers in Ontario from their location at the Discovery Farm near Woodstock. John Gregg, farmer, journalist, and Glacier FarmMedia Regional Director for Ontario, was there. He joins us now to tell us about what he saw. John, thanks for joining us today.
No problem, Gord.
So, COF's relaunched for the first time since the pandemic. What did it feel like to be there? What was the sort of overall sense of the show after such a long absence?
Yeah, it was, well, for me, it was really great to be back with the industry, to be back with so many people that I haven't seen for so long. You have your core of people that you have to interact with, but then there's a whole constellation of other people around that we haven't seen for a long time. So it was really great to be there. And I think there was large attendance. So obviously I wasn't the only one willing to get back to being in person. I talked to a couple people who were going, this is different. I haven't been in this kind of environment since the pandemic, but mostly people were pretty happy to be there.
These shows always feature a lot of innovative stuff. What was there that you saw this year that really sort of surprised you or was really of interest to you?
I think Some of it is the real advances in ag tech, with kind of a whole new ag tech ecosystem and proving ground in Canadian agriculture, which wasn't really there a few years ago even. And there was certainly a lot of emphasis at the show on what's the new ag tech. And here are some of these companies. They're often small. They're often scraping by. They're often often hustling to try and sell their company. So it was really interesting to see a whole bunch of them there. There was Omafra had a tent where they allowed some of these people to be into which was helpful to get them on the site and talking to farmers. There was and as part of that, there were several autonomous technologies there at the show, which were being demonstrated in the field. There's a company in Ontario called Haggerty Agrobotics that is working to bring some of these technologies and test to Ontario and test them in the field. A lot of those are fruit and vegetable technologies, kind of weeders, planters, but there certainly drew a lot of interest from people just to go and look and debate it and scratch their head and so I think that was part of the draw. And then just labor saving technologies, I think, are increasingly and continually of interest, whether it's in the dairy or livestock sector or not as much in the crop sector, because labor is not as expensive an input in the crop sector as compared to equipment, compared to some of the other sectors. But certainly, ways of being more efficient, I think, are certainly of interest.
And I always find that there's at least one surprise to the show for me when I go to them, or something that I wasn't expecting to be an issue and people are talking about it. Was there anything that kind of struck you as unexpected that you saw emerge?
Well, I think it's some of the ag tech, that kind of ag tech ecosystem that's kind of evolved over the last few years, where we haven't necessarily been all that good in Ontario and Canada at nurturing people with technology ideas. They've kind of had to go off and figure it out themselves, and often they just didn't. But there seems to be a supportive ecosystem from the industry, from organizations, from government to nurture some of this ag tech, some of these new ag tech ideas. A lot of which are pretty fascinating. Whether it's new ways of placing seed, new systems to manage your farm or parts of your farm. I think a lot of these companies are going to be challenged to get to the market, and a lot of discussion these days is how do you actually get to the market, because farmers don't have what they take off every year is worth a lot of money, and it happens in a short period of time, so they've got to be right. They can't mess around with it. So that's part of the challenges. But I think just the sheer volume of interesting technology companies percolating in Ontario and Canada is it's kind of fun, but we'll see where they get to.
That's great, John. Thanks for taking the time to talk to us. And I know how exhausting these shows are, so I'll let you go and catch up on your rest a little bit now.
Yeah, thanks, Gord. You're right about that.
Fantastic, John. Thanks a lot. I really appreciate it. That was Glacier FarmMedia Regional Director for Ontario, John Gregg, telling us about the recent Canada's Outdoor Farm Show. That's another edition of Between the Rows. I'm your host, Gord Gilmour, saying so long for now. We hope we'll see you again next week, and stay safe out there as harvest progresses.
Maybe you've had an idea about upgrading your operation. Maybe about finally getting that renovation done or buying some new equipment. Or maybe you're thinking about how you can be a bit more financially secure from season to season. Get some help making it happen by speaking with an RBC Agriculture Account Manager. Then, set up an investment plan to make even more of your ideas happen. Visit rbc.com/chart your course and get started today.